Hey, welcome investors to the 40 Finance channel. Today I've got 8 blue chip stocks and we're going to take a look at what would happen if their valuation multiple were to shrink back to a time when we had higher interest rates. So if you're projecting ahead in the stock market here in 2022, you're worried about, what happens to valuation multiples in a time of interest rates going up. That's exactly what we're going to try to simulate here. And there's a lot of ways you can use this data in regards to buying, selling, or holding the stocks we're going to talk about. You could use it as a floor target. How far down could these stocks potentially go from today? You could also use it to set up a buy range if you're making your shopping list. Maybe use a plus or minus 10% on these numbers as an area that you would actually buy these names. And then lastly, of course, you could use this information for other stocks that you own that are not covered here. I will say that since these are all blue chip stocks, they have an extended history that makes it much easier to go back in time. So this is not going to work with stocks that have no EPS, stocks that have a limited history on the market, say 3 or 4 years. We're going with companies that have profits and track records, and that's the only way you can make something like this work. All right, so here's how I set this up. The first thing I needed to do is to identify a period where interest rates were rising so that we could go back in time and check out the valuations of these blue chips. And for my purposes, I took the time span between 2015 and 2019, and here you can see the Fed funds rate clearly was going up during that stretch. And it's interesting because it's very similar to the starting point that we're seeing now. And we got all the way up, if you count into the 19s, we got all the way up into the 2.4 area before they started to pull back on the Fed funds rate. So 2015 to 2019, we want to study the valuations of these stocks and come up with a multiple. Okay, in the interest of time, I've already went ahead and calculated what I consider the average forward PE during this time frame for all 8 stocks. But just in case you want to go back and do this yourself, I used Yahoo. I'm a Finance Plus member, so I have access to the historical data. And this is Procter Gamble. And I just did the annual charts, which end on each company's last fiscal quarter. So this is the forward PE at the end of the fiscal year for each of these companies looking back in time. And you see what we have here with P&G. 2015, you were at an 18.7, 2019, 23.6. Just taking these 5 numbers and making a simple average. In the case of P&G, I'm using an average of 20 for their forward PE to represent the years between 2019 all the way back to 2015. All right, now in terms of the 8 stocks I chose, I wanted to make sure we had a spread across different industries, so I'm just going to skip the FANG M's right off the bat. We're going to start here around Visa. Okay, so today we got Visa, J&J. I'm not going to do JP Morgan, although it would technically qualify, but I think that with JP Morgan, it's very difficult right now to project earnings for them because of the interest rate setup. So I'm skipping the banks. They have a whole nother valuation game to them, and I don't want to disrespect anyone who invests in banks because there's more than one way to calculate the returns there. So skipping JPM, going to P&G, Walmart, Home Depot, skipping Bank of America for the same reason. All right, I'm going to skip MasterCard because we already have Visa, and it's basically a similar story. Want to include Exxon, Pfizer, and Coca-Cola. And quick pause here, if you guys are interested in Seeking Alpha, one of the ways that I support my channel is promoting their subscription service, link in the description. It is my affiliate link, and you get a substantial savings on a 1-year premium subscription. So check that out if you like what you see on this video. All right, so let's kick things off with Visa. I'm going to open this one in a new tab here. And Seeking Alpha makes it pretty easy because they put all forward metrics on their stock page, which for me is super helpful. I'm not much of a trailing 12 months PE person, much more interested in the forward. And this is definitely a plus with Seeking Alpha because they just posted right here. All right, EPS forward for Visa, $7.04. I did the back end average on historical PEs prior to this video, and I have an average of 26 between 2015 and 2019. So during a 5-year period of increasing interest rates, Visa was averaging a forward PE of 26. So if we take that 26 forward PE, we multiply it by $7.04 on the forward earnings estimate, you get a price of $183.04. $183.04. Visa on another down day today is trading at $196.44. Now for me, I hold Visa stock, and I would be inclined to say that it is a buy under 200, certainly for the long term. But if you want to try to peck out the floor for Visa, there is some rationale in the 183 price range. I will add that anytime you identify a floor, particularly in this wacky environment, it does make sense in some cases to have a plus or minus 10% buying range. You know, plus 10% is going to put you, that's about another $20. It's going to put you about 203. But if you're looking for a comparative floor from past valuations, 183 is where it would sit today. Now, before we get into all of the other stocks, Visa, like everyone else on this list, does offer a dividend. Visa is not going to be on the high side of that. Looks like a yield of 0.73%. So if you factor in total stock returns, there's more calculations to be done. In this case, we were just looking at the stock price. All right, back to our list here, Johnson & Johnson. We have a forward EPS, $9.79. Going back from 15 to 2019, J&J averaged a 16 on their forward PE. So if we take $16, multiply it by 979, and you can see they're very close to that 16 right here. But 16 times 979 is 156.64. J&J is today is at 160, so they're right in that range. And then if you want to factor in a 2.57% dividend percentage on today's price anyway, I think if you're holding J&J stock, you're in a pretty good place, and there might be an opportunity to add a couple more shares here or there. All right, next up we got Procter Gamble. Forward EPS of $5.91. Looking at my notes here, they averaged about a 20 PE. In fact, I think we looked at that when we kicked off this video. An average of a 20 forward PE, multiply it by 591. That gives you a price in P&G of 118.20. So 118.20 on P&G, far below this 160. Keep in mind, you do get the dividend, but using these simple calculations and comparing it to a recent time when interest rates were going up, you can make the argument that P&G's forward PE of 27 is approximately 7.53 points off of where they traded the last time we had a rising interest rate environment. All right, let's talk about Walmart. Forward EPS of $6.41. Looking back, they averaged about an 18 between 2015 and 2019. If we take 18 and multiply it by $6.41, you would get a price of $115.30. So Walmart potentially still has room to go if you're looking for the absolute floor. Thinking about it in a different way, if you want to do plus minus 10% on my target there of 115, puts you up to about 126, 127 for a share price. So maybe a couple bucks left to fall if everything holds consistent from the last time we had interest rate hikes. Walmart also has the dividend yield on today's price, 1.57%. So factor that into your total returns as well. All right, how about Home Depot? Great indicator of consumer building, new homes, all those things. Home Depot right now, forward EPS of 15.51. If we go back 6 or 7 years, we have an average of about a 20 on the forward PE. So 20 multiplied by 15.51 gives you a price of 310.20. So Home Depot potentially running a little hot compared to some of the other stocks that we've looked at here. Again, though, if you say plus 10%, on a buy range, that puts you at 340. So it just depends on how many nickels and dimes you want to count. Keep in mind, like the others, you do get a yield of 1.89% on today's price. All right, how about Exxon? And at first I wasn't going to cover Exxon, very similar to why I wasn't going to cover the banks, because I think with oil companies, there is a ton of sensitivity to crude oil prices. So I did not go back and compare crude oil prices from 2015 to 2019, but there's some more math that you can do on Exxon. But let's just keep it in the simple formula that I have been using for everything else. You have a forward EPS of 521. Exxon between 15 and 19 had an average forward PE of 22. So 22 times 521 equals a price of $114.62. So Exxon potentially trading well below the targets that I've set up in this exercise. Again, I have to stress that the oil stocks are going to be extraordinarily sensitive to crude oil prices. If you think that oil prices are going to go to $100 a barrel, I think Exxon is in a very good place to take advantage of that right now. If you think they don't go to 100, maybe they stay at 80, maybe the government comes in and pushes supply and things come down even more, then you probably have a problem on your hands. The yield, though, you can't argue this yield on today's price, 4.88%. So keep that in mind when you're calculating your returns. All right, what about Pfizer? Pfizer forward EPS of 423. Going back in time, looks like they averaged about a 13 between 2015 and 2019. We multiply 13 by $4.23. Get a share target of $54.99. So Pfizer right now about 10% under the target price in this exercise. They also have a dividend, looks like a yield of 3% or so on today's price. All right, last one here, we got Coca-Cola, forward EPS of 229. Looking back in time, it was about an average forward PE of 22. In rising interest rates, at least the most recent version of that. So 22 times 229 equals a share price of $50.38. Riding a little hotter than that, but again, if you want to add 10% to start a buy range, you'd be right about $55. So almost flat, if anything, from the target range. And you also get a yield of 2.78% based on the share price today. All right, guys, so those are 8 blue chip stocks, potential floor prices, potential deep value prices, however you want to look at it. At least it gives you some sort of a target to think about when you're potentially investing in these companies, or maybe you just want to run that simple formula with the stocks that you own, which I always think is helpful just to see what could happen and are you prepared for it. All right, let me know what you think about these price targets in the comments. As always, please give the video a like, subscribe to the channel, check out the Seeking Alpha special offer below. We'll see you on the next video.